A Bollinger Band is a technical analysis tool defined by a set of trend lines plotted 2 standard deviations away from a simple moving average SMA of a security's price, but which can be adjusted to user preferences. Let us first understand what SMA is. The SMA is a technical indicator that can aid in determining if an asset price will continue or reverse a bull or bear trend. A simple moving average calculates the average of a selected range of prices, usually closing prices, by the number of periods in that range. Introduced by John Bollinger in the 1980s, Bollinger Bands is perhaps one of the most useful indicators used in technical analysis. Bollinger Bands is used to determine overbought and oversold levels, where a trader will try to sell when the price reaches the top of the band and will execute a buy when the price reaches the bottom of the band. Bollinger Bands consist of a center line and 2 price channels or bands above and below it. The center line is an exponential moving average. The price channels are the standard deviations of the stock being studied. Bollinger Bands show the levels of different highs and lows that a security price has reached in a particular duration, and also its relative strength, where highs are near to the upper line and lows are near to the lower line. In other words, the price points near the edges of the envelope formed can help us recognize a pattern at a particular moment. The bandwidth widens and narrows depending on volatility. If it's high, the band would widen, and if the volatility decreases, then the band would narrow. These bands show oversold and overbought conditions in relation to a selected time period moving average. We know that markets trade erratically on a daily basis, even though they are still trading in an uptrend or downtrend. Technicians are moving averages with support and resistance lines to anticipate the price action of a stock. Upper resistance and lower support lines are first drawn and then extrapolated to form channels within which the trader expects prices to be contained. Some traders draw straight lines connecting either tops or bottoms of prices to identify the upper or lower price extremes respectively, and then add parallel lines to define the channel within which the prices should move. As long as prices do not move out of this channel, the trader can be reasonably confident that the prices are moving as expected. When stock prices continually touch the upper Bollinger Band, the prices are thought to be overbought. Conversely, when they continually touch the lower band, prices are thought to be oversold, triggering a buy signal. How to calculate Bollinger Bands? The first step in calculating Bollinger Bands is to compute the simple moving average of the security in question, typically using a 20-day SMA. A 20-day moving average would average out the closing prices for the first 20 days as the first data point. The next data point would drop the earliest price and the price on day 21 and take the average, and so on. Next, the standard deviation of the security's price will be obtained. Standard deviation is a mathematical measurement of average variance and features prominently in statistics, economics, accounting, and finance. For a given data set, the standard deviation measures how spread out numbers are from an average value. Standard deviation can be calculated by taking the square root of the variance, which itself is the average of the squared differences of the mean. Next, multiply the standard deviation value by 2 and both add and subtract the amount from each point along the SMA. Those produce the upper and lower bands. While every strategy has its drawbacks, Bollinger Bands have become one of the most useful and commonly used tools in spotlighting extreme short-term prices in a security. Buying when stock prices cross below the lower Bollinger Band often helps traders take advantage of oversold conditions and profit when the stock price moves back up towards the center moving average line. That's all for this video. Let us know what you think about it in the comment section. Do like, share, and subscribe to our channel Explified.